Good morning friends and welcome to the pre-market view. We've seen smart pullback in the global markets over the weekend, and on Friday US markets were up anywhere from 1.25 to about 1.75%. Particularly Nasdaq was sharply up as we've seen that the jobless claim data that came in was at about 1,42,000 versus the expectations of more than 2 lakhs, and that now has created a situation where the Fed could delay the rate hike, and that has come as a positive surprise for the markets. European markets too were up anywhere from 0.5 to almost about 1.25%, and when we look at the Asian markets today morning, most of the markets are showing a sharp uptick. The Nikkei is up almost about 1.25%, Hang Seng is up almost about 2%. The Chinese markets are going to shut till Thursday, and SGX Nifty is suggesting that we are going to open up almost about 70 points higher from the Thursday's close. In terms of flows, friends, FIs were net buyers in the cash market after a long time, though the amount was small at about 52 crore. The DIIs were buyers to the tune of about 154 odd crore, and in the index futures, we have seen FIs putting in close to about 960 odd crore, which is the largest figure that we've seen after a long time by the FIs in the index futures. So overall, our markets also are likely to do reasonably well given the strong global setup and the backdrop that we have. We've seen some stock specific activity, particularly in the banking, certain auto names where the monthly sales numbers have been good, where the expectations were good, and the focus is also on certain IT names where again the expectations are good, particularly from Infosys and TCS. HCL they clearly disappointed with the profit warning for this quarter. On that note, let me invite Karan to take you through important F&O cues and ideas that we can have from the F&O side.
Good morning friends, I will give analysis on derivatives. In Friday's trading session, after a gap up of around 50-60 points, Nifty faced resistance, stiff resistance at around 8,020 odd levels, and thereon we have seen some kind of selling pressure. However, the losses were restricted to some extent and due to gains in some of the index heavyweights, and eventually Nifty managed to close on a flattish note at 7976.95 with a loss of only 0.04%. Now the open interest terms, we have seen some kind of addition of around 3 odd percentage, that is 5.70 lakh shares were added in open interest. However, the cost of carry dipped a bit from 5.5% to 4.27%. But since it was a flattish note, we will consider this more of the build up on the longer side. And the cost of carry, that is Nifty premium, did decrease from 31 points to 27 odd points currently. Put call ratio have also inched a bit lower from 0.92 to 0.91. However, the interesting observation was the volatility index, which cooled off significantly by around 9 odd percentage. After the event of RBI, we have seen volatility index coming down considerably, and went below the 20 level, which is the crucial support for the volatility index. And we have seen it breaking down. So eventually, if it stays below 20, we had suggested in our earlier conference that if it sustains below 20, we might see more short covering in the market. So watch out for the 20 levels in volatility index. If it sustains and if it continues to dip more from current level, we'll see more short covering in the market. On the options activity, most of the strike price of the call option have seen an build up, that is from 8,000 call option, which is the second highest in terms of open interest, has seen an addition of around 4 odd percentage, and 8,100 and 8,300 call option have seen an addition of anywhere around 17 to 6% respectively. However, 8,300 is the highest in terms of open interest, but our main focus again would be on the 8,000 call option. And since in today's trading session also we are expected to open on a positive note, that is around we can see a gap up opening also, and we might see it opening above 8,000 level. So 8,000 call option, we all know that has seen significant amount of writing which have taken place in 8,000 call option. So eventually, if 8,000 call option starts seeing an unwinding, we might see a further upside in the market. However, unlike in Friday's trading session, Nifty were able to open above 8,000 but was not able to sustain around the level, and we have not seen an unwinding. So watch out for unwinding in 8,000 call option to see a further extension of the gain in today's market. While in put option 7,800, 8,000 and 7,500 strike price has seen an highest addition of around 8 to 18 percentage, 6 to 18 percentage respectively. However, 8,000 put option has seen an highest addition of 19 percentage, which is positive for our market, and 7,500 put option still remains as the highest in terms of open interest. There are no securities in buying period for today's trade. On FIS terms and index futures, there were net buyers by around 1,000 crores, and open interest of FIS went up by around 4 to 5 odd percentage, indicating some kind of long positions was added by FIs in Thursday's trading session. Index options, there were net buyers by around 23 odd crores, while stock futures there were net sellers of 130 crores, and stock options there were net sellers of 20 crores only. For our market level, 5 days gap stands at 7,900 with a lower range at 7,900 and higher range at 8,000. We are expected to open above our higher range, and in today's trading session, since I told it earlier, activity in 8,000 call option would be quite crucial to gauge the further extension of gain in the market. SX Nifty is trading positive as suggested. It's up by around 83 odd points at 8041, indicating some kind of gap up opening can be expected. That's it from derivatives. Thank you.
Friends, let me take you through Sharekhan pre-market action, starting with trading ideas. First, a long call on Alembic Pharma, as the company has got US FDA note for a drug which is used in the treatment of migraine attacks. So one can go long Alembic Pharma with a stop loss of 686 and a target of about 721 to about 735. Biocon has acquired a manufacturing unit in Visakhapatnam based Acacia Life Sciences for an undisclosed amount, so one can go long on Biocon with a stop loss of 439, target of 461 to 470. Concord, the management has given weaker guidance for the next year, and now the volume forecast has been reduced to about 7 to 8% as against about 9 to 10% which was given out earlier. Consequently, the revenues forecast also has been reduced from 15% to about 11%. So one can short Concord with a stop loss of 1534, target of 1458 to about 1428. In other news and developments, the PSU OMC companies like IOC, HPCL, BPCL have slashed the prices of non-subsidized cooking gas by up to about 7.5%. Asian Paints is looking to invest about 2,300 crore to set up a manufacturing plant in Mysore in Karnataka. And under the new regulations by the Bank of England for the foreign banks offering retail services to UK consumers, means that as many as 50 overseas lenders with branches in the country could face similar obligations. So SBI and BOB, which have a large exposure to these markets, could be forced to inject more liquidity in their UK subsidiary. HDFC has raised close to about 5,384 crore through the issuance of warrants and non-convertible debentures. IDFC Bank on Thursday has gone live with a soft launch at about 23 locations, and this includes 15 branches in rural Madhya Pradesh. Adani Port signs a pact with L&T Shipbuilding to evaluate Kattupalli Port. Jet Airways has received nearly about 700 crore fresh investment from a special purpose vehicle created by its strategic partner Etihad. And Airport Authority of India has asked SpiceJet to pay an additional about 70 lakh rupees per day over and above the daily payment of about 1.3 crore towards landing, parking and other support services to clear its dues. So this comes to about 150 crore, so that would be a bit negative for SpiceJet. L&T Metro Rail is looking to raise funds through an ECB route close to about $180 million. Indiabull Housing, 1 billion issue gets shareholders note, and Thompson Greaves has won about $62 million order from PTPLN for power transformers in Indonesia, and Maruti board has approved the pact with Suzuki arm for a Gujarat plant. Coal India has missed its forecast of output by about 4%. Sterling Holiday, which has been taken over by Thomas Cook, is looking to invest about 25 to 30 crore to build a 72-room 3-star property in Jalpaiguri in West Bengal. And Apollo Hospital is now set to foot in the home care segment and make high-quality integrated healthcare accessible. And it is also looking at investing about 1,400 crore for expansion for setting up of 4 hospitals, a few clinics, and home care services in the country. For September, most of the auto companies have announced their monthly sales numbers, and from the pack, Eicher, Royal Enfield continues to show robust growth at about 59%. Ashok Leyland also, the growth was very good. The momentum is clearly reflected, and Eicher CV, the growth was 10.7%. Maruti was more or less in line with market expectations. However, in case of Hero MotoCorp, Tata Motor, TVS Motor and Mahindra, the numbers were slightly below market expectations. Here is a list of stocks with positive and negative bias. Stocks with positive bias are IOB, Coal India and Aditya Birla Nuvo. Stocks with negative bias are Tatacom, Cipla and Arvind. Stocks for investment that we like at this point of time are Aditya Birla Nuvo, IndusInd Bank, Reliance, UPL and LIC Housing Finance. That's it from all of us, friends. Have a great trading session and see you tomorrow at the same time.